Hello, good afternoon, students. Today start the new important topics journal. In earlier classes, the basic rules of debit and credit discussed in details. Now today discuss the important topics journal. Actually, what is the meaning of journal? Journal, the books in which all the business transactions are entered systematically for the first time is known as journal. Actually, the books of which transactions are recorded in the source of documents is known as books of original entry. In common sense, when any transactions are happen, they are recorded in a first book. This book is known as journal. Okay. Now, journal is the main important topics. It is the main important and it should depend upon the double entry system. You know, the double entry system means every transaction must be recorded under two sides, one side's debit sides and another side's credit sides. Okay. Now, what are the main features of journal are as follows. Now, main features of journal are as follows. First feature, it is a book in which all the transactions are recorded. All transactions are recorded. That means business transactions are happen, they are recorded in a first, that is known as journal. Now, it is a book in which all the transactions are recorded in the books. Number two, a journal is a books of prime entry or original entry or day book. That means so many name in the books of journal, original entry, day book, etc. etc. Okay. Now there are another features also. A journal is a daily accounting records. Transactions happen, they are recorded every day in a regular and systematic way. Okay. Next features, in journal all transactions are recorded in date wise. Date wise mean say January 5, then January 7, January 10, not again January 2. That is the date wise or chronological order. Okay. Now next again features, in journal both debit and credit aspects of every transactions are recorded under double entry system. These are the main important features of journal, double entry system. You know, in the earlier classes, double entry systems means every transaction must be recorded under two sides, one debit sides and credit side. That is the under double entry systems of bookkeeping. Bookkeeping means the keeping art of recording in a regular and systematic manner, that is known as bookkeeping. Now next point, brief explanation of the transaction is called narration. Any transactions happen, they are recorded and their brief explanation. Explanation means detailed history of the transaction is known, that is known as narration. Again also another feature, it maintains the identify of each transactions and provide a complete picture of the same in one entry. Another features also, a journal has a record of daily transaction. Again another feature, a single journal entry may also have a record of more than one transaction. Such type of entry is called compound entry. The main features of journal. Now next discuss what are the functions of journal. The functions of journal are as follows. Main functions of journal are as follows. Number one function, it maintains a date wise record of all the business transactions. Number two, it explains the debits and credit aspects of each transaction by applying the double entry system of bookkeeping. It provides a basis for posting of entry into ledger, that means journal into ledger. Next another functions, It keeps the separate a complete record of business transaction at one place and a permanent record of the business transaction. This is the main functions of journal. Next again another theory portions, objectives of journal. What are the objectives of journal? The journal fulfill the following objectives. Main objectives are: number 1, the use of journal simplifies ledger. Okay. Number 2, from journal itself adequate explanation of each entry may be obtained, as every journal entry is supported by narration also. Narration means is a brief history of the business transaction. Again their objectives: in journal both the aspects of transactions are recorded, hence it ensures observance of double entry system, that is debit and credit. Another objectives: journal helps in solving misunderstanding and disputes in the business transaction. Now next discuss the advantages of journal. Now what are the advantages of journal? The main advantages of journal are as follows. First advantage is it provides a date-wise record of all business transactions in a mathematical order. Number 2, the use of journal ensures the observance of double entry system in the recording of transaction. Another advantage is the transactions recorded in the journal with details the amount of debit and credit and the amount of each transaction are also recorded. From journal, next advantage is from journal adequate explanation of each entry may be obtained, as every entry in journal is supported by narration relating to the transactions. Okay. Now another advantage is the use of journal specifies ledger, as details recording the business transactions are not required to be noted down in the ledger. Another advantages, last advantages, as each transaction in journal is recorded by date wise or chronological order. That means there is no possible omission of a transaction in the books of accounts, and it is very easy to locate a particular transaction at the time of requirements. These are the main theory portions of journal. Now next theory, what is the format of journal? This is the format of journal. Actually format of journal may be divided into their 5 parts. First part is known as date, second part is known as particular, third part is ledger folio. Ledger folio means ledger page number. Fourth, that is the debit amount, and fifth is credit amount. Now again discuss in details format of a journal. That means how to write journal is the format. It divided into their 5 parts. First part is date. Suppose 2020 August, 2nd August. Now that is that you write date by date, 2nd August, 3rd August, 4th August, and so on. Particulars mean the brief history, which account to be debit, which account to be credit. It should be recorded in details with also recorded narration starting their word being, that is the particulars. Okay. Now third, ledger folio. Ledger folio means ledger page number. Journal to ledger posting, that means ledger in which page number recorded, either real account or personal account, nominal account, their page number also given in details, that is the ledger folio column. And next column, debit column. Debit column means which account debit, these are recorded debit column amount, and similarly which are recorded credit, these are recorded credit column and amount also. That is the format of a journal. Okay. Now before starting journal, you apply the rules of journalizing. Now journalizing rules, that means the English approach rules may be divided into 3: personal account, real account, nominal account. Personal account already discussed in earlier topics. Personal account or relating to persons, their golden rules: receive her the debit, give her the credit. Okay, this is the golden rules. golden rules for personal account. All accounts relating to persons. Persons, again, three types of person: natural persons, artificial persons, and representative personal account. Their golden rules: receive her the debit and give her the credit. Real account, all accounts are relating to assets, the fixed assets, current assets, land, building, plant, machinery, etc. There, what are the golden rules? What comes in debit and what goes out credit. That means assets comes in debit, asset goes out credit. Next, another account, nominal account, all business expenses and income, that is the expenses and losses are recorded debit, all incomes and gains are recorded credit. That is the rules of journalizing. Now, before journalizing, you are explained in details which account to be debit, which account to be credit. It should be the format. You are just brief history of the transaction. One given, 5 examples are given how to prepare journal entry, which account debit, which account to be credit. Now explain in details. Now first started transaction. Ram started business with cash rupees 50,000. This is the business transaction. Now you are follow the under double entry system. Double entry systems mean every transaction must be recorded from two sides, one debit side and another credit side. First you identify dual aspects concept or double entry system. Every transaction identify there are two related accounts. Ram started business with cash. In this case, two transactions are recorded. One is the cash account and another is capital account or Ram's capital account. Okay, this is the identify two related account. First is the cash account and second is the capital account. Now cash is the what types of account? Cash is the real account. Okay, cash is the real account. And capital, which capital? Ram's capital. That means personal account. Personal account. Okay, now what types of accounts? Identify you. Then you effect the golden rules. These rules, that means these rules, all cases you apply these rules. Effect of golden rules, that is the real account. Real account, what is the rules? Comes in debit, goes out credit. Now in this case, Ram started business with cash rupees 5 lakhs. As a result, business cash increases. Now then comes in, what comes in? Comes in, that means debit. Comes in, the apply which account debit? This is the cash account debit. Now next, one account debit, another account automatically credit as per rules by the double entry systems. Now again, why you are this credit? Capital is the personal account. You apply the rules, golden rules, receive her the debit, give her the credit. But in this case, Ram give her. Give her means credit. Which account credit? This is the capital account credit. Okay, everybody understand? Again repeat, Ram started business with cash. What is your duty? First you identify every transaction must be there two related account. One account cash, another account capital. Now cash, what types of account? Cash is a real account and capital is a personal account. Then you apply the rules. Cash account, that means the effect of golden rule comes in, cash comes in. That means assets increases. Assets increases, that is cash debit. On the other hand, capital is the personal account, capital is the liabilities and also their giver, then credit. Okay. Now next, point number 2, purchase goods for cash rupees 60,000. This is the business transaction. Now then your two accounts are open in this case. One is the purchase and another is cash account. Now again you, what types of account? Purchase is a nominal account. Nominal account. And cash is a real account. or short form R account. Now then you apply the rules. Which rules? Golden rules. Okay. Now apply the golden rules in this case. Now purchase is a nominal, that means expenses. Expenses or losses. Expenses. Now which account? Debit, purchase. Purchase account, debit. Similarly, cash, in this case real account, cash is goes out, comes in debit, that means what? Goes out. Goes out, that means cash is credit. Okay. Now next, cash deposited into bank, rupees 50,000. This is the business transaction. Cash deposited into bank. That means two accounts are identified. One is the cash account and another is the bank account. Okay. Now these two accounts are open. One is the cash and another is the bank account. Now both are a real account. Cash deposited into bank, both are real account. A real account, B also real account. Now they are affect the golden rules. Cash deposited into bank, that means in this case cash goes out. What? Goes out, that means cash credit. Now bank, deposit into bank, bank also comes in. Bank account, debit. Okay. Now next, cash sales rupees 80,000. This is the transaction. Cash sales. Your two accounts are opened. One is the account cash, another account is the sales. One account is cash and another account sales. Sales account, but not goods account. Some of the books are recorded goods account. This is also correct but technically wrong. That the cash account and sales account. Cash account we are open. Cash is the real account. Sales is the nominal account or short for nominal account. Then you apply. In this case cash comes in. That means cash comes in. Cash account, debit. And in this case income, then sales account, credit. Sales account, credit. Okay. Now last, rent paid rupees 5,000. Rent paid is the one type of transaction. You first identify the two related account. First account is rent account, and another account is cash account. Rent, what types of account? Apply the nominal account, and this cash is the real account. Okay. Now then you apply the golden rules. Nominal, expenses, cash goes out, expenses, that is the rent account. Rent is debit, and then cash goes out. Cash goes out means cash credit. Before identify which account to be debit, which account to be credit, this is the back step your calculation. First identify the two related account, then what types of account, then effect on golden rules, and then which account to be debit, which account to be credit. Okay, everybody understand? Now then this is the format. Then which account debit, which account credit, it should be recorded in the format of journal, date wise. Suppose first transaction you write cash account debit to capital account. Now their format already given. Date, particulars, ledger folio, debit column, credit column. You are recorded cash account ... debit to capital, amount 5 lakhs, 5 lakhs, debit 5 lakhs, credit 5 lakhs, and their brief history, that is the narration, being Ram started business with cash. Okay. Similarly, purchase goods for cash. Which account debit? Purchase account debit to cash account. Okay. Cash deposited into bank. Their answer, cash deposited into bank account debit to cash account. Okay. Next, cash sales. Cash account, which account debit? Cash debit. Cash account debit to sales account. Okay. Last point number 5, rent paid rupees 5,000. That means journal entry, which account debit first? Rent account debit to cash account. Everybody understand? Is the easy transaction, that is the recorded which account to be debit, which account to be credit. Okay, thank you.